it's a very flat day today, but it's been a relatively encouraging week.
Right, and so today's not surprising that it's relatively flat. It's almost kind of digesting the move that it's had, right? Look, we moved up through 2840 and then through 2850, which was really, on a technical level, what we needed to do in order to break to new highs. And so I think the market's just consolidating here. We're backing off. Look, we haven't tested 2850, which should be a level where it finds now support on the way down before it makes its next move up. Look, I think it feels good. I think it feels okay. The market feels better. It wants to test it. You can almost feel like it wants to go there by the end of the week, and it very well may.
Caleb, what do you think about the market at this point? I mean, like Will said, quiet day, not a lot of movements in treasuries either. What is the next catalyst to drive direction here?
Well, we're at the tail end of earnings season here. And if you look back, it's been remarkable. So 80% of companies have beat their earnings per share estimates by analysts. And that's the highest on record since FactSet started reporting in 2008. So it's been, on the earnings per share side, 24% beat. On the revenue side, 9.8%, almost double-digit revenue growth year over year. So it's the fundamentals are incredible underneath all the headlines and the tariffs and the concerns there.
Rick, I wanted to ask you about the Chinese trade data that came out earlier today, stronger than expected. Is that a sort of last hurrah, or do you think genuinely sustainable, particularly when you consider the fall in their currency?
I think it's definitely a last hurrah. It's modified behavior in lieu of tariffs and the questions, of course, that circulate on whether they will actually be implemented, how long they'll last. Is this going to go from a trade squabble to a full-blown trade war? These are all key issues, and I think they will affect many of the exporting scenarios around the globe that get caught in this crossfire. I would like to address that last guest on soybeans. You know, here in Chicago, we've traded the grains for quite a while at the Board of Trade, now the CME. And one of the refrains here is that, you know, if you want to keep things simple, global demand for beans is really strong, and global supply is pretty darn matched to it on soybeans. So I know that many want to get involved in the politics of what's going on with grains, and I think that last guest really nailed it. It comes down to not a lot of choice, actually, and it doesn't matter who customers are or how they switch. There's the same amount of beans as there is demand, basically. The big issue with the grain markets in China isn't about this season and probably isn't about next season. It's about long term. Think Carter and Nixon. When you have presidents that screw up agriculture for multi-years, then you change what crops are grown in which countries. You put new countries on the map the way we did with some Latin American countries with regard to soybeans. But in the here and now, many of these tariff issues, as important as they may be, are probably a bit overblown. And I think the grain market is the prime example.
Beans are fungible, Rick? Is that the bottom line?
Absolutely. And you know what? And the Chinese have huge social pressures to supply, you know, chickens and grains. Truly. I mean, it sounds kind of simplistic in the United States, but it's a big social deal in China.
Last word, Kenny Polcari.
No, so listen, I just think that today we're going to cruise into the bell here, doing really nothing. But I think Thursday and Friday could actually see us test and really take over 2880 with 2872, which is the closing high of this year. It kind of feels like it feels exciting. It feels like it wants to do it. The news is good. They said it today. The earnings were great. The macro data is strong. It's all good. So I think it's up and away.